back to another video. This is episode 2 of Trading with Beginners. In today's episode, we'll be going over pips and lot sizes and how to calculate them. This is an essential in your journey into learning how to trade. But if you do like today's video, guys, don't forget to like, subscribe and share the video for more regular free content. We measure the movement in price in pips. And the pip is the point in price. And the price of a pip is determined by your lot size. But we'll get into that later on into the video. When we use TradingView measures the pips for us. So as you can see in this example, with this short position, we are using a stop loss of 20 pips, as you can see just above my cursor. And our take profit is 60 pips, as you can see, again, just below my cursor. And this is measured by the change in price. So as you can see, our entry will be at this grey bit here, 0.79842. But when we measure pips, we look at the 4 numbers after the decimal point. And this is for the FX pairs, excluding JPY. So as you can see, our stop loss will be 0.8004. But like I said, we focus on the 4 digits after the decimal point. So we'll leave at this 5. And as you can see, the difference between these two will be exactly 20.3 pips. But we just say 20 pips. But when it comes to other pairs, such as JPY pairs, we can see they're written a bit differently. So as you can see, instead of 1.65 or 0.797 or whatever, when we go to USD JPY, for example, it's written differently. So 142.089. And with JPY pairs, we calculate the pips, but we focus on the first 2 digits after the decimal point. So we have 142 decimal point, and then we focus on the next 2. So we focus in on 09. And when we use TradingView, obviously we get our position, and it will just calculate the pips for us. So our entry will be this bit here, so 143.00. We leave out the 2, and if it was to move, so 100 pips, obviously you can see the take profit would be 142. But obviously since it's 100 pips, obviously that's when it comes into the before the decimal point, sorry. So if we was to go 50 pips, for example, obviously we can see we focus on the first 2 digits after. So we can see it's moved up by 50 pips. And when it comes to stocks and shares, we just measure it as a normal whole number. So if the price of a share was £352, for example, and then obviously the movement in price, if we just bring up a share, for example, let's just say Amazon. Obviously, Amazon is currently trading at $136 per share. But as we can see, if it's moved up to £137, or dollars, sorry, then it's moved up by, or technically like $1, but yeah, enough. But we don't really focus on pips in shares, we just focus on the price. But when it comes to other things like indices, this is where it can get slightly more confusing. So our indices, the ones we trade are the US oil, the Nasdaq, the US 30 and gold. So if we was to go to US 30, for example, so it's currently trading at 326.35. So if we was to place that position, if it was moved up to, we'll try to get a nice even number. If it was to move up 200 pips, obviously you can see it's gone from 326.34 to 328. So it's just, when it comes to like indices, it is slightly more easier to calculate, but people do tend to get confused because there's no decimal point sizes. We determine our lot size by how much of our account we're willing to risk and by how many pips we're risking it over. So as traders, we shouldn't risk no more than, I say, 1 to 2% per trade and no more than 3 to 4% per day. So if you've taken 4 1% trades and let's say they all lost, we recommend that you stop trading for that day or perhaps a couple of days. But a lot size of 1 means we are trading at £10 per pip. And 0.1 lot size means we're trading at £1 per pip, and so on and so forth. So if it was 0.01 lot size, that means we'll be trading at 10p per pip. When beginners are getting into the live markets, we recommend that they use the lot size of 0.01, which is the minimum lot size, so that they're able to count their pips instead of just going for profit straight away. So a lot of new traders often jump in with a big lot size of 1 or like 0.5, just trying to earn a quick profits. And this is how majority of them blow their accounts. So you've got to stay composed and not do this. When calculating our lot size, you can take the easy route by using an app called Stinu, which costs, I think it's £14 for a whole year, which is pretty worth it, to be honest. Or there's the alternative route of calculating yourself, which is just a bit more, I guess, a bit more long. So let's get into calculating them. So if you have £10,000 in your account, remember, you don't want to risk no more than 1 to 2% per trade. So this means we'll be risking £100 per trade in this example. You then divide this by how many pips your stop loss is. Remember, you can calculate your pips by doing it yourself, or you can just use Trade and View. When you place your long or short positions, it will show you the pips that you're risking. So if you was trading at £100 per pip and your stop loss was 25 pips, this means you'll be trading at £4 per pip, because £100 divided by your stop loss, 25 pips, equals 4, and this will give you your lot size essentially. But remember, trading at £4 per pip doesn't mean a lot size of 4. A lot size of 4 would be £40, so that's something to stay aware of. So your lot size would be 0.4. And a key thing to take away is when we place our trades, we aim for a minimum of 1-to-1 risk to reward ratio. This means when we're risking £100 or £200, for example, we want to gain at least £100 or £200 return to make the trade worthwhile. I use on a day-to-day basis just to calculate my lot size is just that bit easier, so I don't have to focus on making calculations when trading on a day-to-day basis. So as you can see, when you load it up, it'll come up to enter your account balance. Let's just use £10,000 for example, and the risk amount. So remember, we want to risk 1 to 2% max, but I usually just risk 1% per trade. Oops, so we just enter the risk amount and how many pips your stop loss is. So as I showed you earlier on Trade on View, it will calculate this for you. So when we place our positions, if it says our stop loss is 25 pips, for example, we use 25 pips. Then you click next if you want to do that, and then it will tell you to enter the currency pair you are trading. So let's select GBP USD for example, then it will calculate. As you can see, I told you to use a lot size of 0.4, which means you're trading at £4 per pip. This does differ slightly when trading the other currency pairs. So for example, if you was to do NZD JPY, you'll say your lot size is 0.56. And this is why I use Stinu, just to let my stop losses and my lot sizes just be more accurate, so I ain't over risking my account. Together, just to test what you've taken away from this. So judging by this 1.0932 to 1.0982, how many pips has price moved up, and how much profit would you have gained when trading with a lot size of 1? Just remember, when trading with a lot size of 1, this means £10 per pip. And an easier way to think of this when trading with pips, think of this as your thousands, hundreds, tens, and your single units. So if the tens have moved up from 3 to 8 or 32 to 82, how many pips has price moved up? Leave your answers in the comment section and we'll pin the correct answers. Video guys, in our next video we'll be going over more strategies into trading and how to trade the markets a bit more. And we'll also be discussing with you the websites that you should be using when trading. But feel free to join our Telegram, and don't forget to like, subscribe, and share the video for more daily free content.